Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 388 on August the 15th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Ondas Holding, the Silver Trust ETF, and Unity Software. And we discuss three new trades on B. Riley Financial Inc., Core Scientific Inc., and Rigetti Computing. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets climbed higher once again this week. The Dow Jones Industrial Average grew 770 points, closing at 44,946 points. The S&P 500 index picked up another 60 points, ending the week at 6,449 points. And now it's time for the topic of the week. The topic of the week is clarity. Over the years, I've met a number of people who aspire to be traders. I've also worked with a number of traders. We don't often discuss clarity. When I ask people what their trading plan is, it's typically to trade options in the direction of a trend. That sounds logical enough, but it's not clear. How will you define a trend? How will you plan your entries and exits? This is like moving residences. When people plan on moving residences, they create efficient plans for all of the large items. Things like sofas and beds, bookshelves, those get moved pretty quickly and efficiently. What happens next is where the pain of moving sets in. It's typically the little things that were looked over. And the details like coffee cups and plastic cups and candles and those sorts of things end up adding hours to the moving process. In that same way, the smaller overlooked details in your trading plan might be what's creating a problem for you in trading. I have found clarity in simplicity. That has come after years of having charts that were so heavily marked up that you could hardly see the price because of the layers and layers of indicators being used. How will you get clarity in your trading plan? That's the goal. Clear actions from a clearly defined plan. If you need help, give me a call, shoot me an email. We can definitely discuss. So that's it for the topic of the week. Let's go ahead and dive into the trading review of last week's trades. We're going to start off with our covered call on Ondas Holding, symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. At the time, the stock was trading for $3.55 per share. I looked at buying stock and selling the September 4 call at 45 cents. That could give us a return of 25.35% in 6 weeks. Well, shares of Ondas Holding grew 31 cents, ending the week at $3.86 per share. The call option that we sold gained 15 cents, leaving us with a net profit of 16 cents if we were to close the trade out immediately. That would be a 5% return on capital in 1 week. I always like to point that out because it's easy to overlook. Still, this pales in comparison to the 25% we hope to earn as the stock goes above $4 per share. The stock price is headed higher so far, so no adjustments are needed at this point on the trade at all. It's working as planned so far, and we are a long way off from expiration on September 19th, so definitely keep track of the stock price and try to protect the profit over the next 5 weeks if there is a reason to make an adjustment. Next up, we have the credit spread on the Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. At the time, the stock was trading for $34.87 per share. I looked at selling the September 34 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Well, shares of the Silver Trust ETF lost 38 cents, ending the week at $34.49 per share. The in-the-money put spread that we sold is now at the money. The share price is between our short and long strikes, which means we are currently losing money on this trade. Still, the stock price is above our break-even point, so there's no immediate need to make an adjustment. This trade has 5 weeks left, and I'm leaning towards letting the ETF breathe a bit. You could close the trade for a 6-cent loss right now. That's not enough for me to rethink my initial analysis. As long as the stock price remains above the break-even point, I will avoid making an adjustment on this trade. I don't want to sell a call spread against this put spread and then see the price rise higher, and then you basically just lock in a loss on the iron condor. So for now, I'm going to exercise a little bit of patience, but I'm definitely going to have the break-even point in mind as I manage this trade going forward. And then our final trade from last week was the debit spread on Unity Software, symbol U as in uniform. At the time, the stock was trading for $33.25 per share. I looked at buying the September 32-33 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that's a 66.67% return on capital in 6 weeks. Shares of Unity Software jumped $4.77, ending the week at $38.02 per share. The in-the-money call spread that we bought is now deep in the money. The trade has worked out extremely well at this point, and you can always look to expand the strikes to try to make more money on our original idea, or you can let this one work out over the next 5 weeks as is. Keep an eye on stock. There's risk on until after expiration, which is a reminder that the stock could move the other direction and cost you all of your profit. A less profitable option, if you're really itching to make an adjustment, is to buy the September 33-32 put spread, which would create the box. That would leave you with paying 87 cents for a $1 box, guaranteeing a 13-cent profit mathematically. Of course, that's roughly a third of our total profit if we just let this trade play out right now. So I'd rather be a bit more patient and let this one work out fully. So far, it's a nice trade. Let's keep it that way. So that's it for the review of last week's trades. Today, August 15th, was options expiration for all monthly options in August. Expect the 50-cent strikes to be priced on Monday morning, so there may be better opportunities when the market opens back up. All trades on today's show will use the September 19th expiration for monthly options in the month of September. So let's dive in with the new trades for the week. We're looking at the covered call on B. Riley Financial Inc., symbol R as in Romeo, I as in India, L as in Lima, Y as in Yankee. The stock ended the week at $6.82 per share. I'm looking at buying that stock and selling the September 7/2 call at 79 cents, hoping for a return of 21.55% in 5 weeks. Now you enter this trade by buying stock for $6.82 per share and selling the September 7/2 call at 79 cents. This trade makes the most money if stock prices finish above $7.50 per share. The break-even price on this trade is $6.03. In real terms, the stock purchase will require $682 and you'll collect $79 for selling the option. Next up, we have a credit spread on Core Scientific Inc., symbol C as in Charlie, O as in Oscar, R as in Romeo, Z as in Zebra. The stock ended the week at $14.13 per share. I'm looking at selling the September 14-13 put spread at 39 cents. That could give us a maximum possible loss of 61 cents per spread. Now you enter this trade by selling the September 14 put at $1.07 and concurrently buying the September 13 put for 68 cents. This is a credit spread because we are selling the spread. This trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.61, and in real terms, you'll receive $39 per spread that you sell and have $61 at risk. And then our final trade on the week is going to be a debit spread. I'm looking at Rigetti Computing, symbol R as in Romeo, G as in Golf, T as in Tango, I as in India. The stock ended the week at $16.65 per share. I'm looking at buying the September 15-16 call spread for 61 cents. That could give us a maximum gain of 39 cents or a 63.93% return in 5 weeks. Now you enter this trade by buying the September 15 call for $2.60 and concurrently selling the September 16 call at $1.99. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $16 per share. The break-even price on this trade is $15.61 per share. In real terms, you'll pay $61 to enter the spread, and your maximum gain is $39 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for the questions I got this week too. I'm going to be using one of them for our topic of the week next week. So keep listening, share it with your friends. And hey, I don't know if you guys are excited, but we are only weeks away from Labor Day. The market volumes tend to increase after Labor Day. So I'm looking forward to it. Bring on the volatility. Let's have some fun trading options as we close out this year, hopefully for a strong profit. So hope you're having a great year. Hope you have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.